On this episode of Real Estate Insiders Unfiltered, we talk about affordability, interest rates, when the market might start to recover, how property taxes affects inventory. It was an incredible conversation. Tune in. You talk about it privately, we talk about it publicly. This is the Real Estate Insiders Unfiltered podcast. Welcome again to the Real Estate Insiders Unfiltered podcast. I'm your host, James Dwiggins, along with my co-host, Crazy Uncle Keith.
Yes, sir.
Keith, tell us about Mike Simonsen, president and founder of Altos Research, the person that you are a freaking fanboy of.
Super fanboy. This is one of my favorite. Well, yeah, absolutely. Yes. I would someday I may just sell everything and follow Mike around the country in a van like a Grateful Dead aficionado. Probably not. But Mike was awesome. We talked about, are people really trapped in their interest rate or aren't they? We talked about affordability and some different potential solutions. He talked about a tax thing that made both of us almost want to throw up in our mouths.
Yeah.
And a whole lot of other just great insights and sort of getting past the clickbait of people talking about the real estate market and using data and actual information to give us an
and some things that I've never heard before, and just the data he has access to is incredible. So anyway, it's going to be an incredible show, peeps. Tune in.
Yeah, put it in your ears, kids.
Mike, it's so awesome to have you on the show. I know that I am excited, but I know there's someone
not
even
as
more
excited as I am. Not as excited as I am. I have been stalking this guy forever.
By the way, I know a lawyer that can help you file a restraining order if you want, and I know where this individual lives.
Won't work.
So
you know, at this point, I take it as a high compliment. I appreciate the attention very much. Thank you, Keith.
All jokes aside, we're about to have you do your quick bio, but I seriously have been listening to your podcasts and your webinars for years, and the content and information and the way you parse data is some of the best I've ever seen. And I'm the nerd at our company that tries to parse the data, and you're one of the sources I go to. So thank you for all the hard work on that. We'll get weird in a minute, but by the way,
if you guys are all wrong on your data, Mike, I know who to blame now. So to be clear,
I'll take it.
But amazing work for the industry. Thank you.
Yeah, no, for sure. And I think let's do a few things. Just tell everybody real quick, listeners and viewers, your background, keep it under a minute, but you're very influential in the business. You understand data better than most. So how did you get where you are?
And if you can work in a Burning Man reference, that would bonus extra credit. So go ahead. Sorry. All right. I'll go on mute.
Leave for Burning Man next week. So
my man. See,
we're going to miss 1 week of video. So I'm Mike. I've started Altos Research in the January of 2006. Ooh. So 17 years doing the data. I am a data software guy by school and by, professionally. And I happened to fall into real estate in the real estate data. And I bought I bought a house, little old piece of shit, overpriced Silicon Valley house in 2001.
That's all of that.
Yeah. Right? So like the rest of us.
In 2001, 2 bubbles ago.
Right.
And needed to understand what was happening. And I just started building data models, watching every house for sale in my town and then in the whole region. And then I was like, let's do this for the whole country. And so in 2006, I quit my last day job and said, we're going to commercialize this. And, 10 days later, Zillow was on the front page of the New York Times launching with $100 million of venture capital.
Which was a big deal at the time.
Right?
Big deal.
That was so much money back then.
Yeah, and it was in the zeitgeist that we could understand the real estate market better than anybody had ever understood it before. And so I happened to go the route of bootstrapping and, using my own
man. Yeah. I can relate to that. I made it. And so, it's been a fun ride along the way. And now all of a sudden I'm, have a deep fondness for the real estate industry after all these years. And you just recently sold to Housing Wire, correct?
That's right. Last year, HW Media, Housing Wire acquired Altos. And so I am still running the company with a team. 100% of the team is intact. The brand is intact. The product is still doing the same thing. And we're just doing, the media and the data work really well together as a company.
Makes sense.
For sure. Keith, let's start us off on the rapid fire because we want to. This is going to be interesting because he's going to Burning Man next week. I want to hear how he answers some of these questions.
Maybe that. Yeah. So, all right, first one out of the gate. If you could be any superhero, who would you be and why?
Any superhero. So I like the obscure superheroes. I like the ones that are like, the ones with the like the questionably useful superpowers. Like, you can change clothes quickly. Right. So I like the.
So what's yours?
Well, what's my superpower? So, I like.
He's gonna say Tony Stark because he's like data driven.
It's so Tony Stark's way too
mainstream.
Mainstream. I like I have a long answer to this question, but I'm going to go for the short answer. The short answer is I like the flight superpowers. I like the invisibility, like those kind of things around the edges are super fun for me.
All right. Okay.
So favorite book or podcast that you've read recently or you listened to?
So this year, the book that I find myself reading, I've read a lot of books, but the one that I find myself quoting most often is The Creative Act by Rick Rubin. Have you read this one yet?
I did. It's amazing.
Amazing, right?
Great book.
It is. Rick Rubin, music producer, and it's worked with the best creators in music over the last, 30 years.
Yeah.
And eminently quotable. It's like he deifies the creative process. It's super rad.
Yeah. Yeah. It's very good. It's a little esoteric. Like if you're like looking for a hardline business book, I wouldn't scoop that one up. But if you want this sort of meditation on a creative brain, it's amazing.
Right. That's exactly right.
And James's book is something that has a hardcover usually sometimes and then pages in between.
Does it have pictures or does it like pop up in little diagrams?
It does not have pictures, but they are nice little quotable,
Chunks.
One sentence at a time. Has a nice little hippie edge to it. It's great.
The joke, by the way, so you get a mic, is I don't read a lot of books. I like to read research reports, and the only books I read right now are for 2-year-olds.
Yes.
So I could tell you everything about Baby Shark, which I literally hate myself when I say that, or anything else.
That's a rough phase. We're full Bluey phase in my house right now, and
that's happening too.
That's no fun either. All right, if you could have lunch with one person, current or historical, who would it be and why?
Let's see. Lunch with one the
current or historical, either way.
Yep. Yeah. So I'm going to go historical, and it's actually the author of really my favorite book of all time is Richard Feynman. Richard Feynman was like the physicist who essentially invented quantum mechanics. He was in Los Alamos on the bomb, but then he really did over the years amazing things. He was the guy who sat in Congress when the space shuttle blew up, and he took the O-ring and he like ducked it in the ice water, and he goes snap. He's like, "There's your problem." Like Richard Feynman was one of the coolest thinkers of the decade, of the century, and his book is called "Surely You're Joking, Mr. Feynman." It's a great memoir.
Wow.
And he's the next level thinker that I really aspire to.
That's awesome.
And so there are great stories about him.
I'll be ordering that one today. I have not read that one.
It's a great story. Great book.
Awesome.
So, Keith, take us off into this.
Sure.
Let's dive into all of the data, and we're in a really weird real estate market.
Yeah.
Keith and I remember having cocktails, true story, how we met at an industry function. And this is in 2010, right around there. We're in the bottom of the market. 2009. Yeah. Mm-hmm. We're in a room filled with a bunch of real estate executives. We're there on behalf of our organizations. Our presidents both sent us to this. And everyone's talking about how great they're doing. And Keith and I are like, y'all are full of shit.
Yeah.
There's no doing great in this market. And we left and went and had cocktails all afternoon and talked about how shitty everything was and how it was going to get better. So
accurate. You know, when they go around the room and everyone's like, "How's it going?" Like, "Oh, we're doing great. We're doing great. We're like,
doing great." I'm like,
"You're a liar. You're not doing
We're
great."
all down 40%. No, you're not.
I'd be on stage at that time, and I would say to the crowd, like, we're talking about the market and the data.
Right.
And I'd go into the crowd and I'd say, hey, how's the market? And they'd go, it's great.
Yeah.
It's not great.
It's not. You are deluding at least yourself and trying to delude me. All right. First question. So, often with your updates that you do on a weekly basis, you've talked a fair bit and been on record about interest rate and interest rate sensitivity. How is the interest rate situation really impacting the buyer around it? Just in case someone hasn't watched all of your webinars.
Yeah, well, it's so. What we can see this year is obviously affordability challenges like put a big damper on the market.
Yeah.
The interesting thing that I notice in interest rates with really subtle signals in supply and demand side specifically, is it's not the absolute level of the rates, it's the change in the rates.
Do you mean the change or the pace of change?
The pace. Well, yeah. So if I'm like shopping at 6.5. And suddenly rates are at 7.2, now I back off.
You hit the brakes. Right.
I hit the brakes. So so what was interesting is like rates rose dramatically last year. Mm-hmm. And then they've basically been bouncing around the sixes, upper sixes, lower sevens. And so we had surprisingly more demand than certainly I was expecting this year. Mm-hmm. Coming into the beginning of the year, I expected inventory to climb and demand to keep falling, and none of that happened. And it was really so like consumers have a really short memory. They're not shopping on 3% rates; they're shopping on 6%. Or right now, they're shopping on 7%. And if rates fall to 6.5, you're going to see transactions move really quickly. People who've been sitting on the fence take action. You'll see inventory fall. If rates go to 7.5 or closer to 8, you're going to see the opposite happen. Mm-hmm. So affordability is a thing, right? There are fewer buyers right now, but really what we can see in the day to day is that they are really focused on the change in those rates. And if it's rapid change, which we had last year, they're really sensitive to it.
Everyone hits the brakes.
You know what really blows my mind? And I just had this epiphany the other day. I'm just like, there's too many damn rich people. Like, no, like, hold on. I'm literally looking at a house in Pleasanton, California. Not me personally, just I'm shopping because I'm like everybody. I look at real estate. 1,300 square feet, built in 1925. Okay? $1.58 million.
Yeah.
And I'm sitting here going like, who in the hell can afford this shit? Like, it's just like, but I'm looking at it going, there's a point where like just the cost of housing is just outpacing income. Like, I don't understand how, at least in the Bay Area, how everybody is continuing to afford to pay and buy housing at the rates and what they are. I just don't get it. I'm like, there's not that much, we're not printing so much money anymore. Like, what is going on?
Well, I think one of the things you see right now is like, it's unfathomable how the median price home could be affordable to the median income. But what's interesting is since inventory is so low, it doesn't have to be affordable to the median income. There's only 490,000 single family homes on the market around the country.
And what should it be usually? Where should we be?
In 2019, it was 100% higher than that, right? Jesus. Almost 1 million. In 2015, 1.2 million. Right. So it's like not that long ago. So when you have 3 times as many homes on the market, those have to be affordable to a lot more people. And
right. But isn't it more about the first time home buyer? Right. Because here in Northern California, we have the trade up effect, right? Where you've built up a tremendous amount of equity, which never gets talked about. I think I read recently that we are at the highest equity mark that we've ever been in the history of residential real estate, right? So people are sitting on cash. So when I go to buy that $1.4 million house, I might have put 50 grand down when I bought my first house 10 years ago, but my trade up house, now I'm walking in with a tremendous amount of equity that makes that more affordable. So the people who get stuck is the first time home buyers because they didn't get their foot in the door somehow and get to ride the wave up.
Yeah, for sure. I mean, and I mean, we have a lot of crisis in the housing industry in the US. And we put in these structures such that it makes it really a good deal to own.
Right.
And therefore we keep making sure it's a good deal to own.
Right.
And therefore it's harder to buy.
Right.
We're at 4.3 million units shortage of housing. Was that the latest estimate from Fannie? Or I think it was Fannie that came out with that estimate. Basically, we're way short on housing. Yeah. So,
and we're going to dig in on affordability later. We're going to give you a superpower and let you try to solve the affordability problem. So another narrative around interest rates that I'd like to dig in on is this concept of people are trapped in their home because of the interest rate. And I do understand that that's a component. I've been pretty vocal here and other places that I know usually, right? Shocker. Keith was vocal, but I think it's a component, but it gets talked about like it's causal, not correlative, right? I feel like it's very lazy logic when people say, well, people are trapped in their interest rate. That's why no one's buying. An example to that is 25% of homes have no mortgage on them. In the US, most people don't consider that fact, right? So those people obviously aren't trapped in an interest rate. They could trade up easily, right? Or trade down. So
I think it's over 40%, Keith.
See, look, even better. You're the data guy. I'll trust you.
I love how stats are made up on the spot, by the way.
Yeah. So, let's just leave it this, just be vague, right? A massive percentage of homes have no mortgage, right? And then I know someone's going to come in with those are institutional investors paying all cash, blah, 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 whatever, right? But there's a bunch of homes out there with no mortgage at all. So you look at data deeper than I do, obviously, because you gave us the right stat. How is this a true statement? Is it causal? Is it correlative? And if it's correlative, how much so this whole trapped by my interest rate narrative?
So here's the way I would look at it. I would look at it, if we look at it from the lens of inventory, available supply of homes. What's fascinating is the conventional wisdom is that if rates would fall, we'd have more inventory.
Right.
The data is opposite of that. And so call this the Altos rule. The Altos rule is higher rates yield more inventory, lower rates will yield less available inventory. And what happens is higher rates increase the holding costs for real estate. And therefore we hold less, we sell more, inventory builds. Lower rates decrease the holding costs. So we hold more, we hoard more homes, we put fewer back on the market, and therefore inventory falls. So if we're talking about, what will, and you can do this over time. So we can look in, inventory has been falling yearly for 10, 12 years now. We peak at the crisis, and basically rates have been falling. 1 year in there when inventory rose January to January was 2018 to 2019. And sure enough, that was the year that rates rose. And then they dropped again. They dropped dramatically in 2020 and 2021. Inventory dropped. Rates spiked dramatically last year. Inventory spiked. Rates eased down. And so what we can see is that, lock in. What happens is, what will happen is if rates fall, will spur demand, right? But not as much supply, because when rates fall, it's like I'm buying another one. I'm holding my first one. But when the rates are higher, now it's like I'm going to sell. I'm going to move because of my job or my family or whatever life events. Those are going to happen, and now I'm going to move. And now because rates are higher, I'm not holding on to that first one as investment property anymore. I'm putting it back on the market because I need that cash to buy my $1.5 million house in Pleasanton right now, right? So when rates are 2.5,
it's called a shack, by the way, not a house. So right for $1.5 million.
So is that really then? Is it that affordability is the real problem? Is that, and that of course rates are a factor in and around that, for sure. A factor of that.
We can see that demand is lower, right? We can see that supply is obviously low right now too. And so, you can't just look at sales rate, the number of sales and say that's where demand is, because we're in a supply constrained market. If there was more supply, we'd have more transactions. But demand is way down from where it was during the pandemic, where you're buying everything in sight and, like didn't matter, right? This crazy hot market.
That brings up, and I'm sorry to interrupt, but that brings up a point that I hear so infrequently talked about that I'd love your take on, because I hear almost no one talking about the pull forward effect of COVID and the pandemic, where we had, I don't know, it depends who you ask, but roughly 1 million, maybe more, a little more, maybe a little less, but we had 1 million transactions more than we usually have during that time frame. And those were folks who, because of external factors, right, working from home, work, could relocate to other places. There were more than 1 million transactions that happened that should have happened later in the normal buy cycle, right? And there was this exterior impact that caused more people to transact. Well, that pull forward means you're going to have fewer deals on the other side of that, right? Because people buy every 7 to 10 years. So do you have any data on that sort of pull forward effect, or just at least your thoughts? You
can absolutely see the pull forward effect in the first half of last year.
Right.
People could see what was coming. They're like, if you're going to do it, you got to get it done before July. And we could see in the total number of like new pendings each week dropped off dramatically. It always drops 4th of July week, but it never came back up, and it just dropped dramatically. And so those were folks who were like, look, I'm going to get this done. I'm going to get it done in June, and that's going to be it. And so that was that. Anybody who is thinking of buying or even selling in 2022 knew to pull forward. And but then, one of the mistakes I made at the end of the last year, beginning of this year, was to assume that would hold. Like, there would still be people on hold. And that's why this year was stronger than I expected, because look, it's still January. It's still like, well, school's going to start. We're time to get a new house. Those kind of things is really are happened again. And so we had more demand certainly than I expected to start the year. But you could really see that pull forward last year, and you could just see that, new supply drops dramatically in 1 week.
Yeah.
Do you feel like as an industry, like, I don't know, I don't know what the question I'm asking here is, but like just a train of thought, do you think like as an industry, we weren't paying attention from just the fact that, we had 2 administrations that dumped trillions of dollars into the economy, right? And that's a fact. Both administrations dumped a lot of money in during COVID, both pre and after. There was like a duh moment that we were going to deal with massive inflation, and we were all just like putting our heads in the sand, not thinking about the fact that at some point we'd have to correct the actions that we took previously. Like I sometimes look back and I'm like, why didn't we realize this shit was going to happen?
Yeah. Well, I think a lot of people were afraid of things like that. And however, I interviewed Nick Timmeros, who's the chief economics correspondent for the Wall Street Journal, on my podcast. And he wrote a book about the Fed during COVID. It's called $1 Trillion Triage. And he was in that book, he was talking about it. He's like the guy who has the highest access to the Fed and the decision making and stuff in there. And in that book, he was talking about how, even before the lockdowns happened, the global economy was just cratering. And so the Fed was like on top of it. And so they were blasting money in. And so, like his book is pretty, it's not complimentary, but it's not critical of the policy. It's like, holy shit,
we needed to do this.
We got to do the biggest thing ever, right?
Yeah.
And so in that sense,
we'll worry about the outcome later. We need to dump money into the economy and make sure the whole thing doesn't crash.
Economy now. And and so then you get the weird, bullwhip effects, and I think we're still seeing that. Like there's still a lot of cash. Like a lot of the recovery in some of the Western U.S. markets this year, like Phoenix and things that slowed way down in the fall, but then kicked in. There are big investment funds out there, billions and billions of dollars, who are like, their mandate is to buy single family homes.
Right.
And when Phoenix goes bloop, that's like, well, okay, that's our buy box. And they bought, and they put a floor on the pricing. And so I think there's still like that was one of the factors we faced with it, kept a floor on pricing this year. I didn't know at the start of the year whether those guys were going to say, I'm afraid, and they were going to exacerbate the downturn, or whether they say, well, I got my cash and put a floor on it. It turns out they put a floor on it. even though
Most
that wasn't
private-
necessarily clear.
Yeah. Most private equity firms don't operate out of fear, right?
Right.
They're usually trying to profit from fear, not
Well, I
operate.
was just reading that I was reading an article this morning that Wall Street is, very much looking at the commercial real estate market. They're waiting for things to kind of quote unquote bottom to pick up assets and, get in on it on the ground floor before they, start to rise back up. So I know we have some questions around that, Keith. I'd love, your take on some of this stuff.
Well, I feel like we keep flirting with and talking about available inventory as a component of this problem, right? So, Mike, just between you and me, when, in the name of all that is held holy by whatever you believe in, will we get more inventory into residential real estate? Please tell me.
All right. So let's see. A couple of headlines on this. The first headline is there's no indication anywhere in the data of any surge in inventory, like not from investors panicking or like the Airbnb bust or the, distressed, homeowners. Like there's no signal anywhere in the data of any surge in inventory.
That is not what I was looking for, Mike.
Right.
No. Excuse me while I go fill this with whiskey. I'll be back.
That being said,
Okay.
we had, the Altos rule. Remember, the Altos rule is rates fall, inventory falls, rates rise, inventories rise. So we had a decade of inventory falling every year with rates down and going lower. So now rates are higher and sort of stubbornly higher. So you can imagine that we will, multiple years resetting that cost basis for like everybody who now owns 2 or 3 homes or even one at this, at lower rates. Their holding costs are locked in, but they will be, those, 4 or 5 million people a year are going to be resetting that cost basis so that when they move the next time, you can't hold 2 houses at 7%.
Right.
You get rid of the one. And so then inventory rises. So you can imagine a multiple years at higher rates, we start to ease back, build a little more inventory back into to get back to the quote normal levels. It took us a decade to get down to here.
And you think that starts next year?
No.
Okay.
I think it starts to, it actually started last year. We had the big spike. And so we're off the pandemic lows. Rates, inched down this year and then, but now they're back up. And so you can see like late season inventory starting to come. I don't predict interest rates. I've been consistently wrong for 30 years on where interest rates are going to be. So,
you and everybody else are fine.
I keep locking in 30-year mortgages and I kept them refinancing. Can't go lower from here. I don't predict interest rates, but if they stay higher for longer, they inch up, you could imagine that that leads us to that greater rate. If let's say we go into recession and then rates start getting cut and the mortgage rates roll back down into the 4s or something, then it hasn't started yet, right? If we're really addicted to the economy being at ultra low mortgage rates, then I think we will continue to reset. We'll continue to spur demand for housing, but not spur supply.
So can I summarize in James's layman's terms, since you two are economic geniuses and I'm not? Basically, if I heard this correctly, we're not going to build our way out of this problem. Like it's not going to be from building new supply.
Well,
it's a combination of.
Yeah, I do think building is one component of that.
But not the primary. You're saying this just has to be some people resetting and inventory comes on based upon, life changes is what I kind of heard.
Life changes, right? Like you have a natural level, a number of people, your demographics, you have, the millennials are still in their peak home buying years. A couple more years of that. And then, you have at some point the boomers are going to have to sell. They're not going to be alive anymore.
Yeah, right.
So
the polite
longer term
is,
demographic things, building for sure. We're finally building maybe enough houses now, but we underbuilt for a decade. So those things are all in place. But I'm looking at, when you just think about resale inventory, think about all the people that and maybe you did this yourself, which is like, well, it's 3%. I'm going to buy the last one. I'm going to keep the next one. I'm going to keep my first house, and now I'm a landlord. I have an investment property.
Yeah, an accidental investor. Right.
Accidental
we talked about that on a pod. Yeah,
such a good deal when mortgage rates are 3%. That then becomes less of a good deal when rates are 6, 7, 8%.
Do you think we're in a holding pattern based upon the election that's coming up and the sort of the polarization of the country, and without getting into politics, just in general, do you think that this is going to be, for lack of a better word, like a lame duck year for everybody, where they don't want to do any major decisions until they figure out sort of where we go as a country? Is that
you mean like the human beings who buy and sell houses, like those folks? Is that what you're asking?
Just in general, like I don't want to make any major decisions in my life until, people think the president has all this power when really it's not Congress, but whatever. They fixate on this. So like, is that going to be in effect for 2024? Like, meaning, are we really talking 2025 for things to start, people getting more comfortable with where things are and making major life decisions?
I don't know. The election's going to be nuts. And I do notice, there are two distinct populations, like two populations in the country they live in entirely different information universes. Yeah. Right? Mm-hmm. There are people in this country who think the economy is in the tank and mortgage rates are high because the economy has been way stronger than anybody expected, right? Like we've been expecting a recession for, a year and a half. Yeah. It hasn't come yet. Maybe it comes I don't know when it comes, but maybe it comes soon. But people have been saying we're in a recession for a year and a half. And so there is that. And maybe those people are making different life decisions. But I think more, James, is more likely that it's, the big vector next would be a recession. Do we have a big job loss recession? Does it happen before the election? Does it happen? After? When does it kick in? And then what does that mean for, homeowners in general? You lose a job. If I lose a job now, and then I go 90 days, wow, I'm not getting a job. And then I'm like, wow, I got to stop. I got to figure out what to do about this mortgage. Then there's another 90 days. Now I'm just starting this distressed process. It's 9 months to a year before that house hits the market.
Yeah.
And so and meanwhile, that house for almost everybody in the country has massive equity and ultra low locked in rates. I'm holding on to that house with everything I got during that. So that's 2025.
And it's still not even distressed. They're going to sell it and they're going to make money on it. It's not like it's going to go to the bank anyway.
That's exactly right. Right. And so that's 2025 inventory if the recession starts soon.
Yeah. Interesting. All right. The other one we've danced around is affordability. I personally believe that is if we could solve that one problem, I think you'd see a bunch of different things happen that would unlock the residential real estate market. So here is your superpower. You are now the real estate czar for the United States of America. You can do anything you want. What would you do to fix the affordability problem?
I'm a city density guy. I live in San Francisco. I am a YIMBY. Yes, in my backyard. Yes, let's build it. And so I am really interested in density and allowing us to build out of it. Instead of building the more massive. Sprawling, right? One more, as they say mansion. In Atlanta, drive till you qualify, kind of, ex-urban sprawl. I think we have a lot of opportunity, and I think there's a lot of good policymakers around the country who are realize that, they realize that yes, we like our homes to have equity, but you know what? it sucks that my kids can't live in California anymore. They have to move to North Carolina or someplace to buy a home. And and like enough people recognize that I think that there's some things underway. The biggest challenge though is that, so many Americans, like the home is the source of wealth and the source of independence. And in a country where we don't have really any social safety net, retirement wise, like if you got your home paid off, at least I got that, right?
Yeah.
And so that it's really hard to like work against that. So all of our laws are about keeping people in their homes, keeping the equity high, giving them tax deductions. Like all of those things are about keeping the home price up. So here's a couple other things I would do. In California, I would get rid of Prop 13. So Prop 13 is the tax law.
Whoa.
Yes. The tax law in California.
I'm sorry, your shit's cutting out. I can't hear. I can't hear you. It's like fuzzing. I literally just almost choked. I'm sorry. I got to hear that. You got my attention now. For those of you that don't know California, but
producer, mark the tape.
Check this
Say it again. Say it again.
So in California, your property taxes basically never go up. Right. Basically never go up. And so, you buy that $1.5 million home in Pleasanton and you're paying whatever, $20,000 a year in property taxes. Your neighbor's been in that home for 40 years. Your neighbor pays
$2,000.
Yeah. $2,000,
right.
$1,800 a year. So what happens is you talk about the lock-in, Keith, right? This is rent control for the richest people in the world.
Yeah.
And what happens is, therefore, I'm never going to sell that house. I've got a 2% mortgage and I've got my tax rate from 1972. I am never going to sell that house.
But you can transfer that tax basis, property tax basis inside the same county, right?
You could do it. Yeah. I mean, yes, but really the effect, there's like weird things around the edge. Yeah. But really the effect is
I'm watching Keith hold back his opinions right now. This is interesting.
But
the effect is in California has chronic inventory shortage, right? So, you could look during
But isn't most of that because of the NIMBY thing, not the, I'm doing what I hate, which is take one data point and make that be the everything, right? It's never one thing. It's always a multitude of things.
We have lots of NIMBYs in California, for sure.
Look, everybody I know touches residential real estate in some way for their profession. We all wish there was more inventory in California, or use Northern California for my example. Every one of my friends feels that way. And almost all of my friends would not want a 4-unit townhouse complex right next door.
Right next door. And they also don't want their property taxes to go up.
Well, that's but to add context, it's also because we have some of the highest tax rates in the nation, in the state. So like you add that plus if we had property taxes at the same rate as Texas, for example, which has high property tax rates, but they have a low state income tax or zero state income tax. So like it's, you're balancing that. And we get into conversation about taxes in a second, but like you're balancing that. If you change that with the way the state is, then you'll drive everybody out.
Well, or what you do is California has high income tax.
Would be inventory, so he's not wrong.
He's not wrong, but like, I don't know if that solves the problem of like trying to get everybody.
California has high income taxes because its property taxes are so low.
Sure, I'm with you. So like you're suggesting you change property taxes, but then you lower the width. I agree. We should do a zero state income tax here in California, by the way. Like
absolutely.
Do all in favor, signify by saying aye. Yeah.
Put it back in the property taxes. Absolutely. Yeah. And you have to worry about like, but what about Granny? Does Granny get booted out? She can't afford her taxes anymore. And like there are
got to structure that.
And every expensive market in the world deals with that. And like there are ways to handle that. And that was ostensibly what Prop 13 was about, but it really means that, if you bought your $40 million home in Atherton in the 80s, you for $8 million, you're paying. It's
a fair statement.
Yeah, and you're never going to sell it.
It's fair. Yep.
And so there's really, James, when you want to talk about taxes, the land value tax is the coolest way to think about it. And we don't have time to go into it now, but it's really...
Well, we're going to have you back on and we'll do a show on taxes because that'll be fun. We'll piss everybody off on that one.
Yeah,
we didn't even get
it's a really great thought there. But that's what I would do, right? It's one of those things that is we all have our mortgage rate locked in. And in California, we also have our property tax locked. So like if you bought in Austin in 2019, you got a locked in low rate and you've got a massive home equity, but your property taxes are going, your costs are going way up. You're like, some of those times it's like, I'm going to sell that one. My investment property doesn't pencil out anymore because my taxes are up. I have to put that one back on the market. The Texas housing market is far more healthy than the California housing market because of Prop 13.
Interesting. All right, you and I, the next
high taxes make a better market. Go figure.
The next conference we were at together, we're going to have a bourbon fueled debate, and I'm going to put.
We'll record that shit because that would be really interesting.
But the logic that you are using is very sound. Now,
and we love healthy debate. That's good. It's an interesting one to talk about.
By the way, the Texas people hate it when I tell them that their housing market is healthier because their taxes are high. They hate that.
Yeah, but it's interesting. Like you take all the politics out of it for a second because that's what everybody's about. Like you're not wrong in your statement. Like it's you bought this house a long time ago. The tax rates go up. Was it 1%? They can adjust 1% or something like that. Right.
Insane.
So it's nothing, and your equity grew through the roof, and you're not. I mean, it's an interesting concept. I mean, it'd be interesting to go down the road of like how you'd adjust all of that because there's a lot of manipulation there. But
you'd have to move some other dials. All right, let's.
We have to wrap. We got to give him the question.
This is the last question we ask every guest. If you were a residential real estate agent today. So you were going to make your living representing buyers and sellers and helping them through one of the most stressful processes of their life. What would you add, change, or do different in your business today? You would add this right now to have the most impact to help your future business.
I like to say there are only 3 questions in real estate.
Ooh.
What's for sale? How much is my house worth? And how's the market?
Yeah.
Right. So, when Zillow launched, right, that front page of the New York Times,
my home worth, right?
How much is my home worth? And of course, the MLS and your IDX on your site, like what's for sale, new listing alerts, what's for sale? Like that's what's for sale. All the other insight, the question is it good time? Is it going to go up? What can I afford? How does it these are all how's the market questions.
Right.
And so having your thinking in addressing those things, like when a lead comes in and they want to know how much their house is worth, that's a great lead, right? But then, okay, next week, your house is still basically worth that same thing. So what are you talking about? That's why we talk about how's the market? Oh, by the way, inventory is inching up. If you're thinking of selling, you have an opportunity here, whatever the message is. So that how's the market is always a real, rich area of conversation. Oh, you're in real estate? How's the market?
Yeah.
I hear it's crazy out there, right?
Yeah. And when I hear real estate professionals say amazing, I want to throw a chair at them. Like that is the worst possible answer. You know what pitch is coming. You literally know you're going to be asked that question 2 to 3 times a day. Why not have a robust, thoughtful, statistical driven answer that will impress whoever asked you that question? Yeah.
And there's only 3 questions, right? So, and then having that a data-driven answer. I'm a data geek, so I'm biased, but it's like, look, dude, there's
but we have to. What you're saying is so damn important because it's like if the industry wants to survive in the future, we can't just be perceived as people that open doors, write offers, and move on.
Right.
Like that's just generally how the consumer perceives their real estate agent. And if that's what we think we do, and that's all we do, then we're gonna have a really hard time articulating value in the future and getting paid for our services. They should be able to talk about, maybe not to the degree obviously that you are, Mike, because you're you study this,
bit of a geek,
but certainly enough to talk about. So certainly enough to talk about the economy in that market and where things are going and what they see and what neighborhood might appreciate better than the other and how policy locally, and I mean this in respect, so I used to live in San Francisco, can also destroy a housing market or make it hard for people to want to live there. Fair statement. Like these things are all important issues. Like our friends in Oakland are having a hard time deciding where they want to stay because crime is through the roof. People make decisions based upon, do I want to walk down the street or not? Realtors need to talk about this stuff. I know it's controversial, but like the reality is they have to be able to educate consumers beyond just showing property and doing this stuff. And I agree with you.
And why they may never be as, knowledgeable as Mike is about the national market, right? They can be significantly more knowledgeable about their local market. Sure. What businesses have come in? How many jobs does that add? There's so much that they can know about the hyper local nature of residential real estate to provide a great answer to that.
It can be as little as like knowing one number. Like, like how's the market? Well, did you know there's only 12 homes on the market in this? Like, there's only 12. Like, they go, wow. Like, and all of a sudden, you're the expert. Like, all I do is I know there's 12. Like, that's I know one number, and all of a sudden, I'm the expert who has an insight that you can't have as a consumer.
They should spend an hour a week just researching and doing data to be able to talk about this stuff, because people will choose people that they want to listen to and that they think know more than they do. So, all right. Well, Mike, awesome. Thank you for being here.
Made my
I'm really conflicted about your comment on property taxes, but I'm going to have to chew on that for a little bit.
I'm curious, not conflicted.
I am curious as well. We would love to have you back, and I think we'll talk about tax policy because that sounds like a fun one. So
I'll skip that one.
But Mike, genuinely, thanks for being here. We appreciate it.
Guys, it was a real pleasure. A lot of fun.
Same. Awesome. Thank you, Mike.
Thanks for joining us on the podcast. Hit that subscribe button. Trust us, it's the best thing any of us will accomplish today.